Welcome to XM.com for this Forex Preview video. We'll be having a look at U.S. retail sales out on Friday. I'm Cristina Marujos, and joining me today is Cristina Partenido, investment analyst. Now, Cristina, the latest numbers out of the United States paint a rather bleak picture of the hit the virus has had on the U.S. economy. Now, the next data out of the U.S. is Friday's retail sales report for April, and it covers the weeks in the heart of the lockdown. Thus, markets are not very optimistic. So what are we likely to see in this report?
Nice to hear you, Christina. Indeed, negative data are not a big surprise anymore, but highly expected given the virus situation and its devastating impact on the global economy. 90% of the U.S. was in a lockdown in April, and we saw millions of Americans applying for unemployment benefits the past 2 months. So forecasts are currently reasonably suggesting a deeper record monthly decline of 12% in total retail sales and an 8.6% fall in the core measure, which excludes fuel and food. Perhaps we may see some improvement in the coming months as the US and the rest of the world are reopening their economies, allowing more businesses to return to operation and consumers to increase spending. But at the same time, there are growing concerns that if economies relax restrictions, especially those that haven't seen a sustainable decline in COVID-19 new cases, a second wave of infections may start since there is no vaccine found for the virus yet. So in this case, we may see a resumption of the old lockdown status, which could consequently further pressure consumption and therefore delay the so desired V-shaped recovery everyone wants to see, even if governments and central banks continue to provide financial support.
But now, despite weak numbers out of the U.S. lately, we've seen the dollar with its haven-like qualities not only being unaffected, but also gaining on weak data. So how do you think the dollar will move on the retail sales report?
Well, I don't think Friday's data could cause a sharp volatility to the dollar, probably because markets know already that health crisis will more likely result to negative numbers that could be the largest ever, since no crisis has ever before shut down economies. No, more importantly, the Fed chief doubted the case of negative interest rates on Wednesday, and that bodes well for the dollar, which was under pressure this week after President Trump called the central bank to push rates below zero. But this scenario is out of the way for now, according to Powell, who said that he will continue to use the current monetary policy to further stimulate the economy and instead called more fiscal support. Besides, we shouldn't forget that economies such as the Eurozone and the UK are also facing political risks and have been much weaker than the US was before the virus started. So I don't think that traders may easily abandon the dollar.
Thank you so much for joining me today. And thank you for watching this Forex Preview video here at XM.com.